Hey guys, what's up? Ross here from the Shamu app, where we provide trade alerts to your phone on a daily basis. Now, I want to teach you for free a strategy that has about an 80% win rate. Now, this is just one of many strategies that I use. You might wonder, why is he giving this away for free? Why is he just teaching it to me? The reality is that my hope is that you're like, wow, what else does he know? And then you want to come into one of my private groups. But I'm going to teach you this right now for free. And I want to show you, you can see these green lines here, how we can predict these kinds of moves with an 80% accuracy. Look at this. And I want to go ahead and preface this by letting you know this video is for entertainment purposes only, not a financial advisor, no financial advice here. You're making your own money, you're pushing your own buttons. But I do recommend that you go through and you test this out for yourself. Put these indicators that I'm about to show you on your own charts, so that way we can you can go back and see, wow, that dude is right. This really does work. Now, I'm using TradingView, and you're only going to need two indicators to make this happen, so you should be able to do it on the free version of TradingView. If you click on indicators here, and you're going to type in Keltner channels, and you're also going to type in Bollinger Bands. Now, your Keltner channels measure just your volatility. Your Bollinger Bands measure volatility and price. But when you first overlay them like this, they look real ugly. So I'm going to show you what we're going to do. First things first, go into your Keltner channels, remove your basis. We don't need it. We're going to go ahead and click on the upper. I'm going to personally turn mine orange because that's how I like to see mine. And I'm going to make the line just a little thicker, and I'm going to get rid of my background. I don't want that on there. Then I'm going to go into my Bollinger Bands here, hit my settings wheel, and I'm going to get rid of my basis, get rid of my background, and I'm just going to thicken up my upper and lower lines. And I don't know why, but I like my Bollinger Bands to be blue. Maybe it's because blue is for Bollinger. No, it's not true, but I'll show you what we do here. We are looking for compression in the market. So that's when price and volatility quiet down just a little bit, because this usually occurs before a breakout move. So I'm going to give you an example here. When your Bollinger Bands, which are your blue lines, break inside of your Keltner channels, you get a squeeze coming up. Not like a short squeeze or something like that, but a compression in price and volatility. And then when your Keltner breaks out through your Bollinger Bands, that is when you will notice that you get a move typically within that direction. Now, your Bollinger Bands are interesting because they will flail out like this, and then they'll get real tapered. And you'll notice anytime they get really skinny, that usually a move is about to occur. So like right here, you'll see they get skinny and then it broke down, and then it gets skinny and then it breaks up and it gets real skinny here, and then they flail out. And so that's why we're using it in combination with the Keltner channels. So here is an example. You have had your Bollinger Bands inside the Keltner channels, just like this. And then your Keltner channel broke up through the Bollinger Band. Well, we would get in after the move has occurred, which would be right here, and we would be placing a bullish position. And the reality is that some of us might have got out here and some of us might have got out here. I'm going to show you in a minute how to choose a good exit, and how to kind of plan what you think is going to occur. As you come through here, you will find right here, you also had this busted through. We would have got in probably actually on this candle right here, and you would have rode that from 440 to potentially 455, maybe even higher. It just depends on your style and your trading strategy. Here, you had this break in. Now, I'll be honest, even though this works because your Keltner channel broke through the upper, so you would have known this is a bearish move, and you would have placed some bearish positions here if you're trading options, maybe some put debit spreads or call credit spreads. I still likely would have not taken this. Why? I like when you see consolidation for quite some time or compression. So, like for instance, you have several candles where the blue Bollinger Bands are within the orange Keltner channels. That's what I like to see. Now, how do you choose your exit? Where do you choose your price action? So here, or your price, like to see, hey, this is where I think I want to exit at. What you're going to do is you're going to grab your Fibonacci retracement tool, and you want to go back to before the compression started. You can go to the most previous low to high before the compression occurred. And you can use these as levels as to where you want to get in and out. So, for instance, if you would have gotten in right over here, you'd be looking at probably getting out somewhere right around this 405 range. Now, if you don't want to use the Fibonacci tool and you're not very good with this tool, then you might just look at your Bollinger Bands in general, but and say, hey, when I start reaching the top of my Bollinger and Keltner and I'm breaking through, I'm going to get out. But another thing you can do is use this to scale out of a trade. So maybe you would have entered here and you could pull half your profits right here, leave the rest in to try to hit through that next level, because we know that if you continue to break through like this, there is a solid chance you're going to get to that next level. I'm personally not a greedy person, so I would love to just take a trade that goes from $392 to $405, be out, make my money, and be in there for my next trade. So that's how you do it. But if you're wanting to use the Fibonacci tool, you're basically going back and you're getting your previous high to low or low to high before the compression occurred, which would be actually right back here. It would be right here. Before both of your Bollinger Bands were inside the Keltner channels. So that's how you could measure that out. Guys, I hope you enjoyed this video. If you did, there is so much more to learn, and I have so much more to teach you. If you are interested, you can visit my free group. I'll drop it to my Facebook group down in the description. And one thing that you can do is just tag me and say, "Hey Ross, how do I get into your private group?" And I can explain that to you. You guys have a great day.